The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting day in trading here at TFNN. Yes, it is. It is the one and only squeezably soft host at TFNN, Dave White. And once again, we go into the breach, dear friends. And of course, as advertised by the market over several days with very light volume on many stocks, we are rallying off, almost 65, something like that, 65, 66 points, S&P points off the lows of Monday. And not uncommon. I think there were a lot of people on Wall Street that knew that they probably couldn't get this market much over 2,100. So what they do is slam it down real quick, get a bunch of shorts, and then squeeze them on the way back up again. But at that point, what do you do? And I think you've got a market that's probably range bound, but I would not be surprised to see us go tag 2,100 in the next day or two, maybe even on Friday at the close. We'll look at the options tonight, but it looked to me like they sold an absolute ton of options for and puts over Friday, Monday morning. Had everybody believing the market was going to hell in a handbasket, and they're going to probably watch those puts pretty much dissolve into nothingness. Yesterday, I had my subscribers go into a lot of out-of-money calls, and the idea is that maybe, or at least on my point, I'm going to risk maybe 1% of my total, maybe 1.5% of my total portfolio for the possibility of making a 5% move in it. And that's where options, especially during expiration, if you can get them on the right time, is it. Now, will they all pan out? No. But it's very rare that you get this kind of risk-reward scenario out here. And my guess is that tomorrow, if Janet Yellen has to use her personal funds, and the Fed is going to be pushing and buying and doing all kinds of manner of things. Now, we've got a few things that that kind of signal that there isn't a whole lot of chance that they're not going to raise. The question is when. Do they say, yes, we're going to raise, but we're not going to raise until January? So they put it off into the future at some point, but don't, and say they're going to do it, but not actually do it. The second thing is maybe they say they're going to do it, and then we're going to wait 3 or 6 months before we do anything again, just to see how this worked out. So there's a couple of ways that they can kind of pull their punches tomorrow to just let people kind of get in. The idea is that they've got to they got to get the traders out here able to get frog boiled, if you know that story. If you don't, that is where the frog put into a pan of lukewarm water and the fire turned up underneath him. We'll just sit there until he is boiled. But if you threw him in hot water, he'd just jump right back out. Well, I think that's what they're actually looking for out here is a bunch of suckers. Janet Yellen, I don't know if she understands or even cares. A lot of people that are academics really have no idea of what's going on. There's a lot of ideology, and we've got to probably got to roll with the punches. My call still is that they push this up into the end of the year, and we go with very light volume up as shorts exit stage left, and that opens up for a very fast and quick-moving down leg going into the first of the year, especially for a lot of the stocks that just have refused to go lower. This would be a great time for them just to drip higher and higher and setting the stage. A lot of times, traders can't wait 5 minutes for a great setup, much less 2 weeks. But I've decided to trade less and learn to spend more of that money. Anyway, we're up 29 points on the S&P cash. Volume is about what it was the last couple of times that we met since Friday, which is about 2.7 billion shares on the New York Consolidated Tape. So we've got just about as much at 2 o'clock on the downside as we have on the upside. And that's what's been frustrating this year. You notice I don't spend a great deal of time talking about the power law vector indicator number because guess what? We are just going down normally pretty much on the same volume we're going up. I don't see that changing into the end of the year. What I could see is one more test of that 2100 area. This time, all the volume fallout as probably past Thursday, we're just going to have declining volume every day. I imagine we're probably going to have 100 or 100, and probably about 100 million less every single day into next week from Thursday. Of course, Friday is options expiration. That's got a lot of people probably stoked. But my guess is that while people were puking up all of their calls over the last few days, the option market makers were buying them. Why everybody was throwing away their calls and buying puts. A lot of people on Wall Street were going, well, we'll just run this back up and we'll get them coming and going. And of course, there will be some people that will deny what is in front of them. They will look at this and go, it's just a bounce and a downtrend. And normally I would agree with them. The problem is seasonality, and it becomes incredibly hard to get a market to truly sell off going into Christmas. Now, I am thinking that we do have a kind of Christmas rally over the next 7, 8 trading days. And that's just going to be with a ton of people that are short, and they're going to want to get out being short. I've got an example of that today in the news, and we'll get into that. As always, we like to start off this show with a little bit of history, but I've got to find it. I moved stuff around today. I shouldn't have done it. I know I shouldn't have done it because then I can't find it. But we'll get the story going. On this day in 1972, a leading survey of stock market newsletters, not mine, of course. I was only 12 years old. Stock Service Digest finds that 84% of well-known stock market advisors are bullish. All but a few are die-hard bearers. Notes the digest are counseling new buying. The Dow doesn't rise above today's level of 1,027.24 for another 10 years into October of 1982. Oh, no sound on that clip. I don't know what the deal is. I'm going to have to figure out what is happening, maybe during the break. We've got Skype keeps playing with the drivers along with my Logitech webcam on Windows 10, and it's getting annoying, but we will continue on. Let's see what I can do here. I think I can do this. I think set up options, system, and I think I go to Sound Blaster out, save my settings, and see.
Danger, Will Robinson, danger.
Do we have sounds now? Because it will become important in a minute. Okay. It says we do have sound. Anyway, it's very easy to get a lot of people on one side of the market or the other. And of course, especially after a year like this year, people will say the market is not going down. But at the same time, they will not say that the market is not going up. Again, I'm just feeling that a lot of people do not want to sell until we go in to next year and they decide to sell and pay their taxes next year on what has been a pretty good run. But, we had probably the most wicked run in 2000 after the beginning of the year, just because taxes were going from, I think, 32.5% to 35% down to 15 and 17 or 18 or 20 for short and long-term capital gains. It meant a lot of people held stocks into 2000. I think a lot of people are thinking that, why not just sell in the next year? At least we don't have to do anything. We haven't made a lot of money this year. The market's kind of gone sideways for the great deal of people. But guess what? Let's not stop pay those taxes this year. Let's go next year. And I continue to think that's what's happening. Other things going on, of course, I always like Chinese.
I like Chinese. I like Chinese. I like their tiny little trees.
I'm still unclear on whether or not the little trees have anything to do with China or Japan or Okinawa. But we'll try to figure that out. But Chinese bonsai trees. So those Japanese, I thought that was Japanese because I thought that was Okinawa. I'll never know. China has begun implementing an official policy of just a 4.5-day work week, starting in an effort to increase domestic consumption and leisure spending. Basically, they're having problems employing everybody. And this city, Chongqing, is the first city taking steps to reduce the work week to 4.5 weeks. So they're going to the France model, which eventually gets people working to about 32 hours a week. The 30 million people living in the municipality in China's southwest will enjoy a 2.5-day week holiday. I think it's Hebei and Zhejiang provinces are also considering giving workers a longer weekend. It is the high unemployment in Chongqing. I don't know. I'm going to have to take some pronunciation lessons in Chinese. Good luck for me. Growing up in the Midwest, I didn't have anybody with an accent, much less anything else. We knew when people from New York had come in or Boston. But that was about it. That's about as far out as we got. I didn't get a lot of foreign diction lessons as a kid. But that will give you an indication of how things are going in China already and make it a little interesting. And, of course, what would it be without a little bit of danger?
Danger, Will Robinson. Danger.
It is dangerous, Will Robinson. We talked probably 3 to 6 months ahead of what was going on in Greece. And I told everybody a little bit. We also started saying the problems in China's stock market. Maybe we're a couple months early on. We have yet another one. And I'm going to call this the spaghetti banking problem. We'll talk more about this when we get back. But there are more problems in River City, folks, and I think they're just beginning for next year. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, as we're back, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can put a message in the den. Anyway, we're starting to see a lot of articles about bankruptcies starting to float around, especially Europe. Now, a lot of these countries were pretty much Western welfare states already, and I don't think that they're going to be anywhere close to being able to take on a lot of the refugees that are coming into their country. Germany is the one exception, and of course, if you know anything about Europe, you know that the Germans actually did win Second World War because they own 80% of just about everything in Europe. While a lot of people, especially right after the Second World War, started drinking the socialist Kool-Aid, the Germans got to work and rebuilt their country, even though it was split with East and West. They did a pretty good job of incorporating all the East Germans back into the country, and it was a big shot of good source of labor. And of course, since they had a common language, it was pretty much easy to reconnect those two countries. A lot of times there's a huge difference. Of course, the East Germans got used to being kind of lazy because it didn't do you a lot of good to work hard. You weren't going any farther forward under the Russian communists. But other than that, everywhere else, I'm starting to see little articles out here like this one with the bank failures starting to roll out in Italy. A lot of these are in smaller banks in parts of the country where literally there is no money left from the local governments. My guess is that they have the same problems that Chicago has and that probably California will soon have. And that is that they were able, during all this easy money, to paper over a lot of the problems. But we're probably going to see more cities, and just from reading the news, it does look to me like Chicago could end up being the Chicago of 1968 all over again, with fire and riots all through the summer if they continue down the road that they are going. And so we could have a little bit of that here. My guess, though, is that we're going to see a bigger pullback, and that is as the easy money tide goes out, as Mr. Buffett says, we're going to see the people who weren't wearing bathing suits, we'll know now. They're out there in the ocean swimming around. Of course, all we can see is their heads. But that tide goes back out. We're going to see who was out there skinny dipping. We're starting to see that already in several little places. I spend a lot of time looking at probably out-of-the-way news articles. But probably the most interesting thing is at least the Italian government basically went after the Cyprus bailout rules and are using those. And, of course, we'll remember how those worked out when everybody was trying to use Bitcoin because you couldn't get a dime. They just screwed everybody that wasn't a big shot. And, of course, things still rather poor there today. But be advised, it's not going to happen overnight. But my guess is by the time the first quarter is through, we will have heard the proverbial cock crow 3 times. A little biblical reference for you guys out there. Hardware floors. Now, we were talking at the very beginning of the show where I said rooster or cock, could be either one. I grew up in the Midwest. I worked on farms, so we know. Anyway, somebody trying to actually, in the peanut gallery of our engineers, trying to let me know something. Anyway, a rooster, also known as a cock on the farm. Anyway, what we saw this actually last night was Mr. Thielsen. Was it Windsor Thielsen? Something like that. I can't remember his first name. Came out last night and said he was covering his lumber liquidator shorts now that the stock was down about 82%. He, after pretty much circulating all kinds of horrible rumors, getting 60 Minutes to do a horrible hit piece on it, came out last night and said, hey, really, it wasn't likely that anybody at Lumber Liquidators knew that Chinese were doing this, and or that they decided to continue doing it after the 60 Minutes story aired. They really, truly didn't know. This is kind of the equivalent of cutting somebody in half and handing them a Band-Aid. We'll talk more about this when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
When I talked about short squeezes, this is a wonderful example. And I'm told in the den that you pronounce Mr. Tilson's first name as Whitney, but you have to do it with a Connecticut locked jaw. Wilson, where is it? It was Whitney Tilson. The third. Probably had to put 2 or 3 names in between there too. But this is an example of a great operator in the stock market. My guess is that he finished going and covering his short. And like we said, you know, this whole down move really kind of made me think that there were just a lot of people that wanted to throw some fuel on the fire and be able to cover at much better levels. And one of the reasons why I always say sell when you can at the end of the show, or cover when you can. My guess is that he saw a horrible day, covered everything, probably got long, and then threw that note out and made a quick 28% on the upside today. And that's normally what these operators will do. They will flip in a heartbeat from long to short. And all the people that they brought along with me, or brought along with them to short the dickens out of a stock like this, will find that they're also getting hammered on the way back up. You are swimming with the sharks when you deal with a big operator like this gentleman. But it is now unclear whether or not there are going to be any lawsuits against 60 Minutes for talking to a gentleman that didn't really speak English. And the question is whether or not this actually happened at all. My guess is that Tilson, by putting this note out, is heading them off at the pass for any big lawsuit. And there will probably be one now that he's done this. But in 5 or 10 years, when this thing's settled, who's going to care? Certainly not if you were long lumber liquidators at the top, or you were short when you went home last night. We talked about a article that came out with Andy Heck yesterday. He wrote about it, and I wrote a really snappy headline for it, which I really enjoyed. Anyway, you can catch that out on Seeking Alpha. It's about CMG Chipotle, and I said it had hit a titanic iceberg of indigestion with its problems, but they're going after a lot of what's going on with DNA. And we talked about this for the last week or two. This whole idea that their food with an integrity means that you can't irradiate your food means now they're going to be washing all their food off and probably testing a bit of the water that comes off all of this and see if they can find any E. coli by the bounce. I still don't understand why they will not irradiate their food. I can understand all the other reasons and ways of animals and even pesticides, but all you got to do is run it through that big machine. That's why we hear so little of E. coli anymore, unless it's at a single branch. Rarely do you see it on this scale, because if you haven't ever seen these big semi load-like devices, sometimes they do it literally in the field. They have huge amounts of radiation. They'll irradiate all the vegetables that come out of the ground almost instantly, and that kills any bacteria or any bugs, anything else going on. And then it gets into the truck, and that's it. And since everything is pretty much sterile from that point on, but you know, you're pretty much going to get the thing probably to somebody's table in the next 5 to 7 days. There's not a lot of time for new stuff to start growing, but by not doing that, you get a lot of time for stuff to grow as it tries to get to your mouth. But they're going to try DNA testing. I still think that they should be irradiating their food. It has been shown to be incredibly safe and effective, but it's not for them, at least they say. We're going to get right into some charts here. Again, oh, did I get my email up? I think, did I forget it? Oh, there it is. Come on, move over there. Move over. Okay, come on. Sometimes it just feels tough to get all this. See if we've got any email. Okay, got actually somebody asking about CMG, so let's take a quick look at that since we did talk about it. You know, it's kind of pulled off of the rip back up to about 780 on very light volume. Again, I suspect that most of these stocks, especially stocks like Chipotle, are going to have problems next year. This is pretty one of the most horrible of the high flyers of the last couple of years. But again, huge short interest going into the end of the year. Can this thing bounce maybe 10, 15 bucks into Friday? I think the answer is yes, especially when we see the kind of light volume over the last 3 days. But my guess is that whatever drift you have higher, it's probably going to find people wanting to sell come the first of the year, and you wouldn't have to get much higher. Now, I can't see any risk reward that would have me pulling the trigger short here, but if we got some kind of move back up to about 670 on this stock, I could see myself pulling the trigger pretty quickly. What else do we have out here? A few other stocks I wanted to look at and see how they were doing. And we want to check back in with the S&P cash, which is already in progress over most of TFNN.com. Up 29 points on the S&P cash, 2.9 billion shares. I don't see any chance of this thing pulling back. We may have a few points in the morning before the Fed announcement. But my guess is that this thing's just going to continue to drift up into that 2 o'clock tomorrow for the most part. Maybe we get to 2060 or 2065. But that kind of looks like where this thing wants to tee up going into the Fed announcement tomorrow. Is it LXIA or is it IXIA? And that's just a big I. Anyway, interesting stock out here. We've talked about this one before, but it seems like I can't ever remember what these guys do, so we're going to look it back up. Application performance and security resilience solutions to organizations in the United States and internationally, offers hardware platforms as chassis, interface cards that generate, receive, and analyze various traffic types. Oh, okay, yeah. It's a network layer company. Again, we said yesterday how many stocks we were going to see testing lows on light volume. This is a good example. The November 4th spike down to $12.53, had 1.6 million shares. Got into it with 1/3 of that yesterday with just 540,000 shares. Now we're bouncing fairly light volume. Again, a lot of these stocks out here that have been on one-way trips from highs out here, probably not going to bounce a great deal. But this not bad in the way of support. So the risk reward to the downside, pretty minimal. Other stocks of interest out here that we see, if you're interested in some little penny stocks, Turquoise Hill Resources, TRQ. Again, as we talked about this one actually is not a bad looking chart. And when we talked at the beginning of the show, I said just how many stocks this year had lighter volume in these legs down. Most of the legs were pretty much equal on the way up and down. And if you can't see it, I'm pointing my arrow at a 4.6 on the way up, and over here on the right-hand side, a 2.9 down. So basically about a 65% energy pullback from this November 4th high in Turquoise Hill Resources. But of course, the proof of the pudding is when you go down and hit a previous low on lighter volume, and that's the September 28th low at $2.41. 4 million shares came into it with 1.8 million shares. Not a lot of love in these penny stocks going into the end of the year. It is the big funds that are looking to probably push these things up and maybe get an opportunity to sell them at the beginning of the year if they can get it. But we're just cresting 3 billion shares here on the New York Stock Exchange today with, 17 minutes left in this show. Super Micros, another stock out here with fairly light volume. Again, this is the kind of pattern that's pretty much everywhere in the markets, and that is that, everything came back off this, in this case, the November 9th low. But the energy from that November 9th low back down to the low yesterday is about the same from the September 1st bottom up to the October 8th high. So we've got a lot of these W patterns, but what we don't have is a lot of difference in the energy and up. In fact, this one's absolutely identical, which just means kind of a bigger trading range for a lot of these stocks. But we'll see how that goes. Now, one of the things that I thought was probably the most interesting chart of last night and why I thought we would continue on was the incredibly light volume that we had in the ProShares ultra short crude ProShares. And this is one yesterday and then Friday we were talking about how many of these stocks came up or came down on very light volume. This was one of the ones I thought was probably most indicative. Yesterday, we did break the high of 137.18 that came from the August 24th spike. We did it on a third of the volume, maybe a little bit more than a third of the volume, but pretty close. 1.5 million shares compared to 620,000 shares. Not only did we spike that high, we pulled back into the trading range, and we did so on that very light volume. Not very surprised to see a little bit of gap back on the opposite side of it. Now, here's where I'm thinking maybe we've got not a long term, maybe not 6 months or anything, but maybe we've got a few weeks of bottom out here in crude. As we said before, how many of these things that had high energy on the right, on the left-hand side, didn't have the equivalent volume on the right-hand side? I've got you an answer here, and that's this ultra-short crude oil move. It did not have near the energy on this right-hand side. If you look at the November 3rd low back up to yesterday's high and compare that to the same hard move down from August 24th to August 31st, you have almost the same dollar amount. But guess what? You just had that monster 5.4 million share day on August 31st that we came in and tested with 1.7 million shares and a second time with 1.2 million shares, telling you that we are in this trading range here. But I think if you had to be looking at this, you'd probably be looking at this big gap that really kind of extends from about 102 to about 112. That's probably where this thing is going to drift back into. I can see crude getting back up to about 40 bucks. And maybe just then start really moving that longer term $30 to $40 range. But I have a feeling that it's going to consolidate in this higher range, the $35 to $40 range, for a while before anything much more happens. And see, what else do we have? Yeah, don't eat any raw food unless you wash it yourself. And more importantly, it should have been cooked and originally had 4 legs to begin with anyway. 2051 on the S&P cash, up 29 points. Is this updating? Let me find it here. Let me just make sure that it has updated. Yep, there it just did. Just wanted to make sure that my charts hadn't gotten stuck. Continue to look at this market, but yeah, some of the options that I have, not all of them, but some are looking at the highs of the days or close to the highs of the days. So I'll be very happy with that. What else do we have out here? See if there's anything else out here. Probably the only one out here is Apple, which seems to be sucking wind, but they've thrown every mud pie at this thing on CNBC over the last day and a half. I'm just wondering when this thing starts to rip. Maybe it doesn't, but I think there's good opportunity that they will rip this one Thursday and Friday for Apple, and that is when they will jam everybody that is short the market out of it going in, of course, to the end of the year. At least that's my thought. Oh, what else do we have out here I wanted to look at? PDLI. This is one of these stocks that's gone down to almost nothing. But again, we were talking just how many of these stocks yesterday we're going to have tested previous lows, and Friday we were talking about the same thing. How many of these things went down and spiked these lows on no volume? PDL Biopharma. Don't know anything about this guy, but November 5th low, this thing spiked down to $3.43. 10 million shares. We got into it with 3.6 million shares. Surprised we bounced here today. Now, this is going to probably be a lighter volume day for a lot of these things bouncing off the bottom. What you want to do is have volume within the next 2 days. I suspect that us going into the Fed announcement is going to mean that we have lower volume through 2 o'clock tomorrow. The proof of the pudding is going to be the volume in the next 2 days. But like I said, I think that they can push this market up on no volume all the way to the end of the year. We will be back. I've got a clip by request. I haven't played the Dow Jones thing in a while, so we'll play that when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And by special request, the Dow Jones song, because, of course, it is ripping today.
Dow Jones, he's passing out cash like an ATM. My man might crash, he come right back again. When he's high, he's cool. Look out when he's low. My man DJ Gurley, about to blow.
Yes, there is a Dow Jones song. If you're unfamiliar with it, go to Funny or Die and just type in Dow Jones and you'll find it. It's like a 3-minute or 4-minute short blaxploitation movie based on a guy named Dow Jones who is a champion of the market. Anyway, it actually has the rapper Common starring in the little short, but they have a lot of fun stuff out there. But not many Dow Jones songs out there, so a blast from the past from Ron. We wanted to hear it once again. After the bell tomorrow night, of course, we're going to have a lot of action. Oracle will be coming out. So you want to be looking at this. Nice gap up today. Not a lot of volume. Not uncommon for Oracle to gap up into earnings, but probably not a lot. If you are a subscriber to my Tech Insider, you will know about what is coming up in Oracle. And of course, probably a good time just to go buy some of those Tiger dollars and get hooked up with the Tech Insider. You'll know what I'm talking about for Oracle and the future of what they're doing and how maybe some other things that they are doing will come along and win. But a good time. Check out those Tiger dollars. Give some good cash to the needy and get a good deal for yourself and a tax write-off at the same time. And I don't know what the deadline is, but I think it's getting close. So I don't know what you're going to do. Maybe sit down in front of the TV tonight. You're going to know, you know what? I should be getting those Tiger dollars right now and not putting it off one more day. December, it's the 21st. Thanks, everybody. Anyway, we were looking at Oracle. Got a few more. Got a couple of minutes left. And, of course, we've got Tom O'Brien for the next 2 hours and then Andy Heck in the 5 o'clock hour. So check them out. Not everything's bouncing out here, but you have a lot of stocks that probably don't look so bad. Marketo, MKTO, is back in its support area. Now, this thing finished off its move on very light volume today also. So it looks like we're getting a lot of these stocks set up for very low volume. Spiked on, what is it, July 24th with some pretty massive volume, 2.7 million shares. We're back down into it with 310,000 shares today. So this gap acting like it should be fairly decent support. Got a little bit of reversal out there. Did fill, at least with the wick, all of that. But that's kind of what you're looking for. If you were short this thing, it was time to get out of it. Again, one of the better looking stocks out here in the fact that it did have a nice run with a sign of strength. It bounced a few times, got a little higher out here without any volume. Just kind of coming over here to the right-hand side. Not a lot of weakness in this one, or further weakness out here. In the meantime, of course, we're all waiting with bated breath. I'll put a worm on my tongue and wait for 2 p.m. tomorrow for Janet Yellen. And maybe the last time I'll be able to play the Will She or Won't She song on whether she's going to raise rates or not. Anyway, in the meantime, sell when you can, not when you have to. Cover when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.